market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, millions of Americans head to the polls today in the 2024 U.S. election, with surveys showing a deadlocked race nationally and in swing states. Let's get more from Bloomberg's Vonnie Quinn. Vonnie, thank you for staying up all night to bring us the very latest. Just how close is this looking?
Well, welcome to Election Day for sure, Francine. Very, very close, neck and neck. You mentioned the millions that will go to the polls. That's on top of 81 million who have already cast their ballots. Now, the latest surveys have been tilting a little more towards Kamala Harris, all within the margin of error, at least for the most part within the margin of error. But for example, we had the Marist poll from PBS showing the Vice President leading Donald Trump by 4 percentage points nationally. And then you had the New York Times Siena poll showing the beating Trump in North Carolina, which of course is a state he won the last 2 elections. And then there was that bombshell Iowa poll that showed Harris on top by 3 points. That was such a shocker, though, because Iowa is such a deeply red state. Essentially, it'll all come down to those 93 electoral college votes from those 7 swing states, Francine. We should know the votes of the easier states pretty fast, but if any state is within a margin of 1 percentage point for either candidate, it will go to a recount, and at that point we may even be looking at legal challenges. Certainly Donald Trump was telling his supporters at the latest rally tonight in Michigan that his campaign had basically already won.
Vonnie, thanks so much. Vonnie Quinn, of course, with us for the next half an hour. We'll get back to Vonnie in about 5 minutes to really delve a little deeper into some of the undecided voters. Now, to talk about markets, we're joined by Ludovic Subran. He's chief economist at Allianz and Bloomberg's managing editor for FX and rates in the U.S. and EMEA region, Rachel Evans. Thank you both for joining us. Rachel, I mean, you've just been nonstop because there's so much going on. The election's on a knife edge. So where's the smart money going?
Yeah, I think a lot of money recently has been taken off the table. So I think the smart money is going back into people's pockets, perhaps, because we had really been seeing, in the run-up to the election that people have been putting on this idea of the Trump trade. But as Vonnie was just outlining there, in the last kind of couple of days, we've seen some polling numbers that perhaps suggest that Harris is not quite so far behind Trump and may even be a little bit ahead in some of the states that really matter. So yesterday we saw a really significant rally in treasuries and also a really significant drop in the dollar, the biggest one-day drop for the dollar since August, suggesting that people are just sort of starting to rethink exactly how big they want to go on the certitude that maybe we will have a Trump win. So I think there's a little bit of money being taken off the table, and that's probably the smartest thing to be doing at this stage.
Ludovic, I mean, we keep on hearing about trading floors and having everyone on standby through the night in case something happens. There are 2 swing states that we should get a little bit earlier on, especially North Carolina. I'm told North Carolina is the one to watch. Ludovic, how do you see things going right now? And again, what does it mean for markets in the shorter term, in the next 24 hours?
Well, this is what Rachel says, which is very interesting, is that a lot of people are pricing 50% of a Trump win, which doesn't exist on market. So that's why they didn't go all long dollar, or they didn't go all rallying for the treasuries, right? So what it means is, the next few weeks is going to be all up for volatility. I think if Trump wins, there's going to be a bit of a rally, but very quickly there's been a repricing on the bond side, so it's going to be quite problematic. If Kamala Harris wins, then the equity market will have to price this corporate tax increase. So I think what is sure is that right now, whatever markets are pricing, it don't exist, which is, a 50% win for each of them. So that means there's going to be a lot of repricing in the coming days. So brace for volatility.
And Rachel, when you look at some of the lessons from the last elections, I mean, this feels different because it's really on a knife edge. But can we learn anything from the past?
Yeah, I think there are a couple of things that jump out to me. I think, number one, sort of expect the unexpected. Coming into 2016, it did seem like Clinton was going to be sort of a runaway, and it was Trump, and the market had to really reprice. So to Ludovic's point, we are going to see volatility because there will be unwinding of positions regardless of who wins. But I think the other thing is that we need to think about the bigger picture. It's not just the presidential election that matters here. And that was something that we really learned in 2020. It really took until kind of the special election in January where we saw the Senate flipping to the Democrats, when we saw yields really take off, because that was a sign that Biden was going to be able to get through some of his spending plans. So there's going to be a lot of focus not only on who actually takes the White House, but also what the split is like in Congress. Do we see kind of a sweep for the GOP, or do we see a divided Congress?
And to that point, Ludovic, I guess one of the main questions is what happens if we have a contested election and actually we have 2-3 weeks of mayhem. What does the market do then?
Well, they will not be happy. So I guess if there is indeed social unrest, the forward visibility, the confidence factor that happens after elections, we can see it all through the past election rounds where you have really this, confidence level up, forward visibility up. This will not happen. This will be postponed to God knows when. And so that will be bad for risky assets, that's for sure, right? And remember, it's all going to be about trade and fiscal policy. The confidence channel is really just there as a safety net, but people are going to be looking very quickly at what happens on the boom bust, what happens on the Fed, can the Fed continue to cut, or there is an inflation risk, and what happens on the tariffs, and how much imported inflation and how much damage does it make to the global economy. Those two pillars are going to be essential. So volatility will not stop once we have, the sweep or the Congress divided type of answer, and it will not stop when we have Inauguration Day in January. This is going to be up for quite some time, unfortunately.
Rachel, how much volatility actually could we see in this scenario?
Yeah, well, I mean, I think kind of like treasuries in previous election cycles, we've seen 39 basis points moves in a day. So that's a significant start, even when we're kind of like processing and digesting the results. But I think, to Ludovic's point, it's going to be all about how those policies come through. And it's kind of hard to sort of get a gauge on exactly what that's going to look like. But we do all remember kind of, the Trump presidency. There were a lot of kind of intraday swings, particularly around some of, his tweets or his comments on what we now call X. Which would kind of give a sense to the market of where we were heading on a particular different policy. So I think it's going to be really interesting to kind of see sort of how quickly some of these policies actually come to pass. Do they, either side, Harris or Trump, whoever's in power, do they actually kind of stick with what they've been saying in the run-up to win an election, to win a campaign, or do they start to moderate? And a lot is going to hang on whether they do have that kind of united or divided Congress as to what they can get through versus having to kind of moderate their opinions and their positions. And a moderation would probably be more positive for the market because it takes some of the edge off. It means it's just a little bit less extreme on either side.
Yeah, is there anything in emerging markets, Ludovic, that you'd be looking at in the shorter term, or is that a story for 2-3 weeks from now?
No, I think, there's been a lot of appreciation of currencies in the emerging markets, especially emerging Asia. And we know, unfortunately, that the seismic wave from a Trump victory, for example, will be sending, depreciation to the emerging world very strongly. So I think it is something that could unwind very quickly in the next couple of weeks, just because of the inflation trade, just because of the reshoring trade, and also just because of, America first, meaning the other second. And so this is something that has impact on some of these emerging markets, which have, twin deficits or that have had issues being attractive for investors and that need to lower rates because they have fought inflation and need to revive growth. But capital will maybe go back to America. So that could actually be a big story, this reverse currency war, if you will, in the next months, not, a year.
Great. Thank you both. Bloomberg's managing editor for FX and rates in the US and EMEA, Rachel Evans, joining us today, and Ludovic Subran, chief economist at Allianz, stays with us for more market analysis. This is Bloomberg. So Donald Trump and Kamala Harris have capped a furious final dash through battleground states with dueling rallies in the final hours of the presidential campaign. Let's get more from Bloomberg's Vonnie Quinn. Vonnie, we saw a number of celebrity endorsements on either side. We saw the rallies last night. What's happening today, and what will move the needle for the undecided voters?
Well, people are voting today, Francine, that's for sure, that on top of the 81 million people that have voted early. But yes, we did see a frenetic round of campaigning in battleground states and primarily in Pennsylvania. Both candidates were in Pennsylvania for most of the day yesterday. Donald Trump then went to Michigan, where he has traditionally finished his campaigning, and he campaigned in Grand Rapids. But essentially what they were trying to do is, if there are any undecided voters left. In the 2 hours between now and when most of the polls open on the East Coast, they were trying to push their message across once again. And also to those low propensity voters, as they're called, the voter that just sometimes votes. So for Harris's part, she stuck to her message on reproductive rights, on the economy. Trump stuck to things like immigration, also the economy. But there were very different tones. So Harris stayed very positive, never once mentioning her opponent. Trump, for his part, went quite negative and actually suggested that the election is already won, and if he doesn't win it, then something fishy must be going on.
So, Vani, when can we actually expect a result? Because we could have early indications, but then it could be, if it's very tight race, it could be in the balance for quite some time.
And oh boy, is it tight. We saw the latest round of polling, Francine, which had both candidates neck and neck, within the margin of error in all but one poll. I believe it was the Marist PBS poll, which had the vice president beating the president by 4 percentage points. But as for the rest of them, they were neck and neck, 48-48 in Pennsylvania, according to the New York Times Siena poll. So yes, we should expect some of the safer states pretty immediately, so within hours of polls closing, right? But the ones that are more contested, the battleground states, they could take anywhere for, from a few days to a few months. So last time round, it took until the Saturday after the election to get some clarity. This time round, we'll see. It depends on how many states come within 1 percentage point either way for each candidate. That triggers an automatic recount, and after that there can be legal challenges. And as we heard from Trump's rhetoric today, we could expect some of those if Kamala Harris were to win some states that he feels he should have won.
Vani, thanks so much. Vani Quinn there on the U.S. elections from New York. Now let's get back to Ludovic Subran, chief economist at Allianz. So Ludovic, away from the U.S. elections, there's also the Fed. What do they do after, there's been so much speculation on how further they will cut. That's been pulled right back.
Look, we expect the Fed to deliver one cut in 2 days, and it's not a hangover cut from the election. It's just that the economy is actually in good shape for further cuts. We expect the Fed to get another time by the end of the year. So it's going to be 150 basis points, so a total of 100, which is good. It's going to be less restrictive. But, two things. The first thing is you see this very interesting, the Fed cuts, but the long-term yields are still on the rise because it's such a different cycle this time. And the second thing is, the big question everybody has is how much the Fed can cut in 25. And I think this is really the question. The cut of the day after the election doesn't really matter. The big question is, can the Fed deliver 4 or 5 cuts in 25? Or is there this fear of inflation reloaded that could actually stop the Fed halfway through its loosening cycle, which will send seismic shockwaves into the U.S. economy, but also abroad?
Ludovic, is there a material difference on what the Fed does depending on who's president, or the composition also of the House?
In a major one, they have so different fiscal policy, so different trade policies, so different immigration policies, and so different, I would say, safety distance to the independence of the Fed. President Trump actually called for a devaluation of the dollar. Imagine the type of additional inflation you could get into the U.S. economy under the different policy tools that President Trump would like to enact, right? We're talking about 1 to 1.5 points. Of course, that would mean the Fed will have to stop at 4% terminal rate instead of going to 3%. So that's a huge difference for the financing conditions of the U.S.
Ludovic, when you look at elsewhere, some of the central bank action, we had a big budget that wasn't taken all too well here in the UK. Does it change trajectory for the Bank of England?
I do think the Bank of England is the one that has the stickiest, loosening path by far. The budget is yet another example that, it can actually take its time compared to other central banks. The U.S. election could actually be having effect on the real rate differential and on the currencies. We know that central banks on my side of the pond are not obsessed by currencies till the moment it really hits home, especially when, the euro was at parity with the dollar and so forth. So for the Bank of England, as for the ECB, I think the room to breathe will be higher under the Harris presidency because the Fed will have a much more, normal loosening cycle. Does it mean that they will have to stop halfway? I don't think so, because the economies warrant a form of loosening cycle. Just look at the inflation in the UK or in Europe. But it will certainly be having effects on the currency and also on the credit spreads, especially for corporates.
So what does it mean, for example, for the Eurozone at a time where we could see also extra tariffs and a pull out of NATO from the US?
Look, the Eurozone, we expect the ECB to be able to deliver 5 cuts next year. So we go to a terminal rate of 2 or 2.25. They will continue with that path because of the very low growth momentum of Europe. But if there is a dollar liquidity drought because of the US being stuck at 4, you can imagine that the financing in dollar for corporates in Europe is going to be under duress. You can also expect the euro to depreciate by another 5 to 10% of the dollar. And you can certainly expect that the yields, the spreads on the periphery assets, I'm talking Italy here, France, Spain, will be actually reacting very negatively to the news of the US, just because the financing conditions will be different and the trade conditions will be different.
Ludovic, as always, thanks so much for joining us. Ludovic Subran, their chief economist at Allianz. Now, coming up, Boeing already seeing the benefits of ending the crippling strike by its workers with its stock up pre-market trading. We'll get the latest on the deal and what it means for the plane maker next. This is Bloomberg. Well, Boeing's stock is higher in pre-market trading this morning. Investors welcoming the plane maker's deal with workers who have accepted a pay offer and ended their strike. Now, for more, let's bring in Bloomberg's global aviation editorial lead, Benedict Kamel. Benny, so run us through the details of the vote. How was it received?
So it was a bit of a mixed reception back in Seattle late in the evening. The vote result is 59% in favor. Now, that's all they needed. They needed 50%, but 59 is not the most glowing endorsement that you need if you really want to get the workers back in your, in your good books. So there's a lot of work left to do here in terms of sort of repairing the relationship. If you think that, 40% give or take still oppose this, there's a lot of pent-up anger. People on the shop floor feel that they were shortchanged in the last couple of years, that they've not been given what they deserved. The pensions, those were one very contentious element that they didn't get back, even with this latest deal. So while this is a victory and it's a good sign, and you can see it in the stock, there's a lot of work ahead for the company.
So, Benny, how long will it be before work resumes, and how can the relationship actually be rebuilt?
So Kelly Ortberg, who's the relatively new CEO at Boeing, he's got his work cut out for himself. He needs to fix the company both sort of culturally, but also in terms of the production line, which has really come to a standstill. That's something you need to remember. This is one of the preeminent manufacturers in the US, essentially producing no planes or very, very few planes at the moment. And Kelly Ortberg, he did say a couple of weeks ago, it's much easier to sort of turn the switch off than to turn it back on. And that's something he'll find out in the next couple of weeks. He needs to sort of get the production line back up again. People need to come back. Some of them need to be recertified. And we're talking about months rather than days or weeks for really production to come back up. And you can see it in the financials. The company has said that they will keep losing cash this year, and that next year, the first half, will also be a cash outflow. So it's really looking into the latter part of next year when we will probably see a more repaired and refreshed Boeing.
Benny, thank you so much. Benedict Kamel, they're in charge of global aviation. Now, coming up, the world braces for the results of a tight and consequential U.S. election. We'll dive into the competing views from the two candidates on the United States' role around the globe. That's next, and this is Bloomberg. morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. These are your top stories. U.S. Election Day arrives as Donald Trump and Kamala Harris end one of the most dramatic presidential campaigns in history. With polls showing a deadlocked race, it's now down to voters to decide the winner. Well, traders brace for volatility from a tight election result, but for now the dollar and U.S. futures hold steady. Plus, Boeing workers accept the latest pay offer, ending a strike that's crippled production for almost 2 months. So the world is watching the U.S. today with a very tight race between two candidates with very different ideas of what role the United States should play overseas. Now, for analysis, we're joined by Ross Matheson, Bloomberg's EMEA News Director, and Bloomberg senior writer Stephanie Baker. So thank you both for joining us. Ross, first of all, it's so tight. I mean, the election is so tight. And I know we talk about undecided voters. Have we ever actually seen such a tight race? Are the polls more correct than they have been in the past, or it's just the way that U.S. politics is being played out now?
Well, that is the question about polls, because polls often come into question about how their accuracy, even now, and do you reach the kind of voters who will tell you what they actually intend to do? And is there kind of a mentality where the polls, in a way, all start to repeat each other, and there's a tendency to see those things in polls even if they're not there? So it's very hard to tell, because what is in the mind of the US voter right now, including those who've already voted, but particularly those will be interesting to see in that undecided category who perhaps have voted Republican all their life, but maybe deciding to vote Democrat but don't want to tell anybody. What about those who've been voting Democrat all their lives and now have decided to vote Republican, but also don't necessarily want to tell anybody? So a lot of mystery around what's in the minds of those voters, particularly again in those swing states as we come into Election Day today. So the polling does indicate it's absolutely deadlocked, and we know it will come down particularly to those 7 states, those 7 swing states, and how voters decide in a minute.
In terms, first of all, when we find out, there are 2 key states. I think North Carolina it seems to be the one to watch out for, the earlier one to watch out for, because they start counting straight away and polls close at 7. Will that be a good indicator?
Yeah, I mean, there was some question marks over North Carolina, given the amount of time that both Trump and Harris were spending in that state. That indicated that they thought that one was up for grabs. But, yeah, they're expected to be one of the earliest states to report. Polls close at 7. I think the bigger story here is that Harris seems to have momentum going into this. She had some of her best polling from battleground states in the last week or so. And there was a Marist poll for NPR last night that showed her up nationally by 4 points, so outside the margin of error. So she's certainly going into this election with momentum. Whether she can carry the day in the battleground states remains to be seen.
What have you found the most surprising thing in all of this, Ross? I mean, there's, it's women issues and women rights. There's also, the Black Caucus that was behind Kamala Harris, but there's a certain demographics that actually is also voting Trump that, intuitively should have maybe voted for Kamala Harris.
Well, that's the thing. As, demographics change, as economic circumstances change, so do voting behaviours change. The narratives that, a certain Democrat, a working-class white voter, will vote for a certain party, for example, or educated voters or women voters will gravitate towards one party or one leader. That seems to be changing, and it's becoming less clear. It does seem as though Kamala Harris has done some work to try and harness the female vote and to take those female Republican voters away from Donald Trump, for example, and to also retain that black vote, because we can see some evidence that younger black voters, male voters, are gravitating towards the Republican Party. So all those kind of established lines seem to be moving and shifting, and that's because politics itself is increasingly driven by personality and less by policy. So people are gravitating towards the person at the top and the personality, in the sense, will Donald Trump be better for me, for the economy, regardless of what he says about, issues around gay rights or women or whatnot. Same for the Democrats. And so you're seeing all those things splintering. It makes it harder as a candidate to capture a group as a whole.
But, Stephanie, unless there's a big win from someone, and it looks very unlikely, this election is going to be contested. What does that look like?
Right. I mean, you see Trump preparing the ground for contesting the election. He's done that by, contesting various lawsuits in Pennsylvania over voter registrations. There's been a sea of disinformation put out there. And I think there's really no doubt that Trump could try to claim that he's won today before we really know whether all the votes have been counted and what the outcome is. And that could drag this process out unless there is a huge margin for Harris and that she wins this decisively. If there's it comes down to Pennsylvania where, the race looks really tight and it comes down to just a few thousand voters, this could drag out for quite a while and could be very contested.
Rosa, what's most perplexing for economists is that the economy is firing on all cylinders. And if this election is contested on the economy, then actually Democrats should be doing quite well. And they don't seem to be punching through in that.
But that's always the challenge between what an economy is actually doing and the people's perception of what the economy is doing. You see that in inflation expectations particularly. It can often be quite a gap between where inflation actually is and where people perceive it to be. And the challenge for politicians is to narrow that gap. And so maybe the Democrats have struggled to sell the message about just how good the economy might be for individuals and where inflation is. That's a positive message is harder to sell sometimes. It's easier, for your opponents to come with a negative message. This is why you feel this way. It's because your wages are not rising, your jobs are not secure. It's much easier to gravitate towards a negative message than a positive one. And also the reality is that Kamala Harris has been a bit careful about laying out specific markers on policy. She has announced some things that she would do around taxes for tipping, for example, to abolish that, for minimum wage and so on. But she's been a bit careful, a bit opaque about her policies, and that makes, again, perhaps she doesn't want to, leave herself open to attack before the election. She doesn't want to be beholden to promises after the election. But it also means that it comes across potentially as a bit woolly sometimes. And again, if you've been associated with the party in power, you're defending your record more often than talking about what you would do next.
Stephanie, if you look at internationally, so you could argue that there are 5 things that could change significantly depending on who's in office. It's Mexico with immigration, NATO and Europe, Ukraine, Middle East, and then China. You've just written a book also about Putin and how he's, changed his economy to go to war with Ukraine and in certain parts of the West. How does Trump in the White House change anything with Trump?
You're right. The stakes for this election for countries like Russia, Ukraine, China, the Middle East, Mexico are just enormous because of the stark differences between Trump and Harris on foreign policy. You see that Putin and Russia intelligence agencies in the United States have recently accused them just yesterday of fomenting disinformation, spreading fake manufactured videos and fake articles designed to undermine faith in the electoral process. And they warned that they would continue to do that and that this risked violence in the United States. I think that Russia wants chaos in the United States. That's, the intelligence agencies have said that they favor Trump, and I think that is true. But I think what Putin really wants is to have the whole process in total chaos for months. And that would undermine, in particular, U.S. support for Ukraine. He is hoping for a Trump presidency because he believes that Trump will not continue to support Ukraine on the level that the Biden administration has. Harris has made it very clear her strong support for Ukraine and that she would continue to give aid for as long as it takes. So I think that the stakes are incredibly high.
What can you tell us about the 10,000 North Korean troops also at the border? So this is basically they were enrolled by Russia.
It's kind of shocking that we have not grasped the significance of this in a greater way. North Korean troops on European soil fighting. And the response so far has been almost nothing. That North Korean troops, the reports were that last night they are engaging, that Ukraine had fired on North Korean troops in Kursk, this region of Russia where Ukrainian forces had mounted an incursion and occupy roughly 600 square kilometers. So you now have Ukrainian troops engaging with North Korean troops on European soil, and there hasn't been a stronger response. I expect that this is going to continue to play out and develop as time goes on.
Yeah, and I wonder whether there's kind of, because of this power vacuum, potentially over the next couple of months, we're going to see, stranger things happen. Do we have a clear indication of, Trump in the White House, Harris in the White House, what that means for the Middle East and Israel?
Well, obviously there are several big conflicts going on. You know, Stephanie was talking about the conflict in Ukraine. There are obviously key questions about what this might mean for Asia with China as well, because China does love a vacuum. And if there is a disputed election that goes on, they will maybe try and take advantage of that. But also in the Middle East, if the US is distracted, you know, domestically for an extended period, in the run-up to next year, what does that mean for the conflicts inside Gaza and obviously, you know, the Israeli invasion of Lebanon that's also going on at the moment, and the threat of a broader conflict with Iran? What we do know is that Kamala Harris has largely echoed Joe Biden on the Middle East. She's been a bit tougher on the humanitarian situation inside Gaza, but, you know, equally she might struggle to have any great leverage over Benjamin Netanyahu. He seems to decide what he wants to decide, whereas Donald Trump would favour, he has that personal relationship with Netanyahu, and he can talk to him, and he would be convinced, no doubt, he could probably end those conflicts quickly. I mean, he hasn't said that he doesn't support Israel, but equally he says that Israel needs to speed up, in his words, and get things done in its goals against, you know, Hamas and Hezbollah in the region. So he certainly would continue to support Israel, but perhaps he'd lean on him also to end things fairly quickly.
OK, thank you both. I could speak to you for another 3 hours, but we do have other news. Roz Matheson, Bloomberg's EMEA News Director, and Stephanie Baker, Bloomberg Senior Writer. Coming up, we'll look at the countries most exposed to Donald Trump win and increased tariffs. We're joined by George Saravelos, Head of FX Research at Deutsche Bank. That's next, and this is Bloomberg. Well, the prospect of Donald Trump returning to the White House and the risk of tariffs and inflationary pressure is playing out across the currency markets. There's been some unwinding of the so-called Trump trade. Investors now waiting for the election outcome with polling on a knife edge. Well, let's discuss with George Saravelos, Head of FX Research at Deutsche Bank. George, I'm so happy to speak to you on such a big day. Which way do you think the markets will go ahead of tomorrow, the big day? Are you staffing all night?
Well, there's a big buzz on the trading floor, Francine. Good morning here. Obviously, it's a huge day. I think it is an exciting day if you're in the market. And we're just looking forward to seeing the results and interpreting the results. I think it's very likely we will see large moves either way, especially given some of the price adjustments we've seen over the last couple of days.
So when you look at dollar strength, George, is it that I understand there's an intuition there's a Trump trade, but actually we don't really know what happens in terms of policy, in terms of tariffs, or do we?
So I think the most useful way of looking at it is looking at market pricing and what's priced in. From our perspective, I think it's very likely you see a symmetric market reaction over the next 24 to 48 hours. For example, in the euro, we think it's probably going to be around 2% up or down. But I think if you're looking ahead to 3 months, when we look at what the market's pricing in, we actually don't see very much in terms of the so-called Trump trade. So to give you a couple of examples, if you look at the inflation break-even market, so what is the market expecting in terms of inflation? If the market was expecting tariffs, you should be seeing an inflation hump in so-called out inflation years. So out 1 to 2 years, the market would be expecting higher inflation, and the market's not pricing that in. Another example is if I look at ECB pricing, where the terminal rate that's priced is around 2%, in the event of a Trump victory and an aggressive trade war, we could see ECB rates closer to 1%. So while I think the narrative is very much around the Trump trade, and you're likely to see big reactions either way, from a longer-term perspective, the bigger reaction from our perspective is definitely going to be in a Trump victory.
George, what about the twin deficit? Again, there's probably going to be a lot more fiscal policy expansionary on both sides. We have huge debt levels. Who's going to be more of a worry for markets?
So it's interesting you raised fiscal policy. You started the show saying, having this headline that the dollar is a cleaner trade. And I would tend to agree with that because the dollar will likely be impacted by tariffs a lot more compared to fixed income. In fixed income markets, it's all around fiscal policy, and there's going to be a tremendous degree of uncertainty there, especially if we have divided government. The twin deficit is, of course, a big focus for market. It's been a focus for France in recent months. In the US, the way we look at it, between the two deficits, the fiscal deficit and the current account deficit, what dominates in terms of risks, and you can see that in academic evidence and empirical evidence, is the current account deficit, because that's telling you how reliant are you on foreigners buying your debt. And if you look at the US, there's something quite unusual. You've got a very large fiscal deficit, but the current account deficit is relatively well contained. It hasn't increased. So we tend to worry less about this issue, I would say, compared to a few other commentators, because largely the US has been self-financing. A lot of the big increases in deficits in recent years has come from US residents rather than foreign residents.
So, George, given all these complexities, is there a call that, for example, Mexico will have huge concerns depending on who's in the White House? Is there a currency play on the back of that?
So we spent a lot of time looking at the numbers. And what you really need to do is look at many dimensions. You need to model how high you expect tariffs to be. Then you need to look at how big the terms of trade impact will be. So that's how much, what's the share of trade with the US of any specific country. And then you need to look at how important is trade as a whole for a country's GDP. When you look at all these multiple dimensions, there's really two countries that stand out. In emerging markets, it is Mexico, as you mentioned, and we would expect large moves, again, either way, given the focus on trade. And in the developed markets, it's the Eurozone and specifically Germany, which has a very open economy. So those are the two where we'd expect the biggest reactions and follow through in terms of, in the event of a Trump victory.
And again, George, I mean, it's very unlikely that we have a clear winner by tomorrow morning. There's also looking at the composition of the houses and how that changes policy and actually how much power the president has. So how long does the smart money wait for to make the right call?
So I think the point you raise around fiscal is very important, especially for the rates market. And as you say there, it really will matter if we have unified or divided government. I'd like to make a point on two other events that are very relevant over coming weeks, which the market is paying less attention to. One is the China announcements we're expecting, and these also relate to fiscal policy. This is most likely going to be on Wednesday, on Thursday. And it's going to be very relevant for China, very relevant for emerging markets. And then secondly is developments in Germany, where there's worries about potentially a breakup in the coalition, which then could lead the market to reassess policy there as well. So a critical 2 weeks. I would say the FX market is likely the first one to respond in terms of movement because it's less reliant on fiscal policy in terms of the impact, much more reliant on what the executive arm does, where there will be control of trade policy. But for the rest, we might have to wait, as you say.
So interesting. George, thank you for joining us today. George Saravelos, there, head of FX research at Deutsche Bank. Now, coming up, we take a look at how the U.S. election has split opinion in Europe. That's next, and this is Bloomberg. Well, as market liquidity evaporates ahead of the biggest risk event of the year, let's bring in Bloomberg's Valerie Teitel. So, Val, good morning. What are the best and worst case scenarios across assets with this U.S. election?
Yeah, we read all the research reports, so you don't have to. Here's a bit of a glimpse of the consensus out there when it comes to what's the best outcome per asset class. When it comes to the best case for equities, it's a clear winner where you see implied volatility across asset classes plummeting, and that's the best upside for elements like the S&P 500. When it comes to treasuries, the best case for a big rally in treasuries is a Harris win in a split Congress where she has her hands tied on how much spending she could put through. For the dollar, it is a Trump win and a Republican sweep. That is where we worry the most about tariffs and fiscal spending giving the dollar a boost. Let's flip on and talk about the worst case scenario when it comes to these same assets. For equities, it's a contested result. We wake up tomorrow, it's still not a clear picture. We worry about the legal ramifications of lawsuits put forward forward. For Treasuries, it's a Trump win and a GOP sweep in Congress. That is the biggest upside when it comes to Treasury yields out there. And then for the dollar, it would be a Harris win and a split Congress. Back to you, Francine.
Valerie, thanks so much, Valerie Teitel there. Now, the outcome of the U.S. election will, of course, have a major impact globally, from Ukraine to the Middle East to world trade. Let's take a closer look at Europe's view with Bloomberg's Oliver Crook in Berlin. So, Ollie, we have great charts, we have great analysis. Who would the world vote for?
Yeah, that's right, Francine. You know the old adage, it's our currency, your problem, in reference to the dollar. It's sort of like that with the U.S. election. So there was a poll that was taken across the sort of world, all the different nations, and they asked the citizens of all these nations, who would you vote for if you could vote in the United States? And overwhelmingly, what we saw from the total is that they are in favor of Kamala Harris by a very large margin. You can see it there at the sort of at the far end there. The largest spread, though, the most sort of pro-Kamala would have be the Latin America, where the spread is about 56 points. Western Europe is not too far behind that, about 53 points. 69% of people saying they would vote for Kamala Harris, only 16 saying that they would vote for Donald Trump. In Eastern Europe and the Middle East, here you see that spread really, really narrow. Only a 5-point difference for Kamala Harris in favor of her versus Donald Trump in Eastern Europe. And the same thing in the Arab world in the Middle East, where that spread dwindles down to about 4%. If you look at the question of global stability, because this is the question that affects everybody, when asked who would the world be more stable with Kamala Harris, 32% said yes. 19% said yes under Donald Trump. However, the question was, will the world be more unstable under Kamala Harris? Only 17% said yes, while 74% of respondents across the world said Donald Trump would make the world less stable.
Ollie, thanks so much. Oliver Crook there with the very latest on the U.S. election. Just one corporate story we need to tell you about. Schroders, that share price is tumbling quite significantly, the most in more than 4 years after the firm reported some $2.3 billion of quarterly outflow and warned of £10 billion more of outflows to come. Up next, Bloomberg Brief, Danny Berger and Manus Cranny in New York. We have full election coverage throughout the day. Stay with us. This is Bloomberg.